Hi, Stephen. Can you hear me okay?
Oh, hi, Alex.
Hey, how's it going?
Just a second here.
Yeah, no problem. Hey, how are
Okay.
you?
I want to. I'm presenter view. I want to present just the slides you're supposed to see.
Yeah, so I saw you had them up just a minute ago.
Just a second here.
Yeah, no problem. Yeah, because I did see your slides just a minute ago before you took them off. I'll let you know when I see it on my end as well.
Okay, that's better. But whoa.
Oh, okay. Whoa. Okay. That's really weird. Yeah, I haven't seen that. It's flashing on my end. Yeah. Do you want to try closing it and maybe just? Oh, yeah. Okay. Try reopening it again. Maybe.
I've never seen that in.
Yeah, I haven't seen that before either. That's really strange.
Okay, that's better.
Okay. Yeah. No flashing on my end either. Perfect.
Yeah, on Zoom I get to see my presenter view, but doesn't seem to work. But
yeah, on the Hopin platform, it's a little bit different. It doesn't really have like a presenter type view, unfortunately. But everything looks good on my end. So I know that I think you have another monitor open as well. So I think you can see kind of what I see here. But everything looks good on my end, so that's great. But yeah, just like I mentioned, I just wanted to give you a quick intro, and then feel free to get started if that's all right.
that's right. That's in 1 or 2 minutes now.
Yeah,
do
sure.
I see a list of people there, or how do I see who's here?
So do you see on the top of your screen, do you see where it says recorded and then 3 out of 5, and then there's a little 14 there? So yeah, that symbol with the eyeball and then the 14, that's the like live count of how many people are in right now. So yeah, once the session like goes completely live, like at 2:30, then you'll start to see it go up in a little bit more, hopefully. But yeah, that's how you can see how many people.
We're private now, or they're watching us get ready?
It's just at 2:30, like a button appears on the left-hand side saying live, and then so people start clicking on it more often.
Okay, sure.
Okay, so yeah, it's 2:30 now, so I'm just going to start this intro, and I just want to say thanks for being here today.
You're welcome.
So hi, everyone. Thanks for joining us, and thank you, Stephen, for speaking. So Stephen Priddle is the VP of Finance and CFO of the SureWx group of companies, as well as president and founder of Practical PD Seminars for Accountants. Stephen has over 35 years of business experience. After working with KPMG for 5 years, he moved into industry. He has held financial leadership positions in both public and private companies in several different industries, and he has gained a wide range of experience in financial reporting, treasury management, merger and acquisition, and other business matters. Stephen speaks at accounting conferences and presents non-technical practical work tips seminars he has created for various organizations, including Canadian and American CPA bodies. Stephen also teaches in the new CPA PEP program and has taught at the University of Toronto and Carleton University, as well as for all 3 legacy accounting bodies. Stephen attained his CPA, CA, and CMA as designations following graduation from Carleton University with an honors Bachelor of Commerce degree. Thanks again for your presentation today, Stephen, and good luck.
Well, thank you. Welcome to Canada's most boring accountant contest. There's been some kind of misunderstanding. What really here is we're here for Canada's most boring accountant contest. No, I'm joking. We'll do a little talk now about the CFO and the new job. Skeletons in the closet. And let me explain that in a minute. But first of all, let me tell you where I am. I'm in the basement of my home. I'm in Ottawa, Canada's capital, 9 kilometers from this building that you're all aware of. And I'm an active CFO like you. I'm not an academic. I'm not a professor. I've done lots of part-time professor, but I'm an active CFO like you. And just quickly, I'm a co-owner of my business. After we did a management buyout 5 years ago, our company is a world leader in its field. And if you've ever flown in the winter where there's snow or ice, my business has made your flight safer, less likely to be canceled or delayed, and environmental benefits. It's technical what we do, but it's related to the aircraft anti-icing systems. So 33 airlines are our customers, about 100,000 pilots use our system. And I have a $200,000 instrument at the Billy Bishop Airport and at the Toronto Pearson Airport, and 33, or more like 35 major airports around the world. So we're aviation weather systems for winter operations. That's what we do. That's my CFO job. I also do a lot of speaking in the finance world. I've created about 43 hours of courses offered by up to 50 CPA bodies around, including CPA Ontario. Do a lot of teaching like that, and non-technical, non-theoretical, practical stuff. And I've also authored over 250 published cases, CMA, CPA, CGA, CA, MBA, all over the place. You have probably worked on some of them. If you graduated in the last 30 years in the world of accounting, you have probably worked on them. So please participate. Type your questions and comments in the chat if you have one. And if it's a question, I may try to take it up live or wait till the end to take it up. And if it's just a comment, not intended for a response, I'll just try to take that in while I talk. So you will probably all change jobs before you retire. You will probably not stay in the same job till you retire. So you have a new job. And having some difficult personal experience in various new jobs, I've developed a 3-part thesis. My thesis is as follows. Every senior finance job you might take may well have skeletons in the closet. Business skeletons, personal skeletons, accounting skeletons, tax skeletons, system skeletons, inventory skeletons, banking skeletons, financing skeletons, internal control skeletons, HR skeletons, even environmental skeletons, legal skeletons, payroll skeletons, and more. In fact, let me tell you, when you take a new job, if your predecessor missed their skeletons, there are skeletons in the closet for you. If they got fired, there's a pile of skeletons waiting for you. If they quit suddenly to take a new job, there's likely skeletons. If they're incompetent, there are skeletons. If the organization was unaudited, there are skeletons. But even if the organization was audited, there may still be skeletons. If your predecessor was over 70, and this does happen, there are skeletons in the closet. If your predecessor was doing a fraud, there are skeletons in the closet. If the predecessor was hiding things from certain people, there are skeletons in the closet. If they were unethical, there are skeletons in the closet. And there's unaudited again. If they got hit by a bus, if they suddenly disappeared from their job, there are skeletons in the closet. If they were the 4th position in the person in the position for the last 2 years, there are skeletons in the closet. If they weren't a CPA, there are skeletons in the closet. And let me go to part 2. And if they got arrested and they're in jail, there are definitely skeletons in your closet. So let me give you part 2 of my thesis. Part 2 of my thesis is you have a few weeks grace when you take a new job where you can't do anything wrong. You can't get in trouble. You don't have to know the answers to any questions. And then after this first few weeks of grace period, all the problems and blame are yours. Problems and blame for skeletons and all kinds of things. So let me give you a vivid, clear example. So it was a newly hired CFO I knew, and the skeleton in the closet in this business was weak bank internal controls, and there's a continuing fraud with significant thefts. Okay, so let's think about that for a minute. If this new CFO finds the fraud and weaknesses in the first few weeks in the job, no big deal. Okay, I inherited the skeleton, no big deal. But it's a huge problem if he doesn't. So he doesn't, and the fraud blows up 2 years later. He did not find the skeleton in the closet. He did not find the ongoing fraud. It blows up 2 years later, and he gets fired. You've been here 2 years in charge of internal controls, in charge of banking, in charge of making sure there's no fraud, and you let this go for 2 years, even though it started before your time. You are fired. So this is what we need to avoid. So the point is you gotta find all the skeletons quickly. By the way, if you're interested in my slides, you can flip me an email. I'll give you an email at the end if you want some slides as a reminder. And this thesis, this idea, so our next point is you need to find out all the things that could burn you later during this period. You got to find all the skeletons in the first few days and weeks on the job. You cannot find them in 6 weeks or 2 years. You got to find them in the first few days or weeks. Now, this is also good when you acquire a business. So your company buys another division of another company, and you're now the CFO of that division as well. There's going to be skeletons in that, guaranteed. So the same principles apply. Skeleton examples. Here I was hired by a company and had recently done an acquisition, and it was audited, but purchase accounting had not been applied. Okay, they hadn't valued the fair value of the assets and recorded goodwill. Okay, historic acquisition, the balance sheet was completely wrong. Company files tax returns as a CCPC for 20 years. They're not a CCPC. They've been claiming the small business deduction for 20 years. They're not. Now, some of you would say, that's the tax advisor's problem. Partly, but if you, as a professional accountant, sign off the tax returns CCPC for the next 5 years, then you notice they're not. It's your problem as well, and your embarrassment as well, and your skeleton as well. The company overbilled government customer $2 million over many years, just found out. It was in a course I was teaching. Oops, got to reverse the revenue, got to create a liability, got to pay out the money. Here's a company I joined, a different company. It had negative inventory. How would you like negative inventory? It has been written down below zero. Is it a liability? Would negative inventory worry you? RevRec and accounting estimates can be huge in the area of accounting skeletons. Percentage completion accounting all wrong, major revenue reversals needed. Here's a company I joined, all leases were done wrong. Even though it was audited, all the leases were capital leases for accounting purposes and tax purposes, but they were accounted for as operating leases for accounting and tax. Deferred revenue had not changed for years. Various skeletons in active subs of a public company that I found. I was a controller of that company. Usually I'm the CFO. Here's a simpler one, not a huge one. All kinds of taxable benefits not deed forward. Another one, owner taking unrecorded dollars out of a company. Never filed tax returns, US tax returns that is, should have. There's some examples of more skeletons in the closet. If you have an interesting, funny, unusual skeleton in the closet that you've ever found as a CFO or controller or auditor, type it in the chat. Make this little discussion more interesting. Now, let's be honest. There are often skeletons, but likely few or none if your predecessor moved internally down the hall. Probably they left a clean closet. Or your predecessor retired after long service and they chose their retirement date. They weren't given an early layoff. There's probably none, but usually there's skeletons in the closet. So where should you focus your review? To reduce risks and learn about the business fast? Well, I'll give you my tips. Something you probably could have thought of, but some interesting, unusual ones. And if you have some tips on what you do when you take a new job to reduce your skeleton risks and get up to speed fast, type them in the chat. So type examples of skeletons in the closet you faced or procedures you do. Well, I like to start with a SWOT analysis. This doesn't necessarily get into skeletons, but it's a very good upfront thing to do when you take a new job. Sit down with some existing senior executives. What are the strengths and weaknesses of the organization? What are the opportunities and threats in the environment? Another important tip is take your peers out for lunch. You're the VP Finance. Take the VP Operations, the VP AT, the VP HR out for lunch, and take them out for lunch and find out their finance pain points and chat with their right-hand person. Sometimes they'll learn more from the right-hand person than them. Another important point is talk to your predecessor. Now, if they're down the hall and cooperative, it's an easy one. If they got fired, it's awkward. Hey, can I take you out of coffee? I'm sorry you got fired. Can we spend a little time today? Can I buy you a lunch? But some of you might say, wait a second. Suppose my predecessor's in jail. What do I do? Well, they have visiting hours. Okay, they have visiting hours in jails. So you go during visit hours to visit your predecessor and get a bit of dump of information and maybe find out about the skeletons. But more seriously, hold an immediate inventory count. They do quarterly counts. You start August 1st. They do quarterly calendar counts. You don't want to take the risk of inventory being wrong. Let's do a special count right now to clean up the inventory the day I join. And special family business tips. If you've never worked for a family business, you've only worked for large companies, public companies, this makes no sense to you. But find out who really pulls the strings. It might not be who you think. It may not be the president, but the founder who's not in the office, or the spouse, etc. Ask about relatives on the payroll. It's better to find out the owner, Sally, is the owner's niece or a pet early on. Check the shareholder accounts. Check the shareholders' accounts. Check the shareholder accounts. Alex had a little comment. Sometimes finding these skeletons in the closet may actually be difficult since the owners brought you on to grow the business and cut expenses. But ultimately, you've got to clean things up in your shop. So you've got to do it, even though those other things are the main reason they've hired you. But you were exposed to them. So a few more. Take the tour. Take the plant tour, the remote office tour, the warehouse tour, the mine tour, the lab tour. When I got hired by my current job, we usually went to our airport labs. Get out there, see the dusty inventory, ask questions. Don't just sit in the finance office. And look at your team's past appraisals and grievances and quickly assess their capabilities. So it's very important. In fact, this has cost me when I didn't do it carefully. Who is being filing grievances? Why? Are they troublemakers, or there are some troublemakers harassing them, etc. And quickly assess their capabilities and find out the weak links. In a couple of companies, I didn't fully understand who the weak links were early on, and it cost me something. Review key contracts with financial institutions and customers and suppliers. That will tell you a whole lot. in terms of information, and it may generate some skeletons. Read past audit letters. The quickest, easiest way to get through internal control is look at the last 5 years of audit letters. What did they complain about internal control? Was anything done about them? And look at the prior adjustments, both booked and unbooked. Booked because they're buried in the materiality, unbooked. What does it mean in terms of biases and system weaknesses and funny things going on? Look at the budgets and forecasts. Look at some forward-looking information. Again, this is briefing to hit the ground running, and again, looking for skeletons in the closet. Study trended financials, especially for a private company who's never lined up 5 years of financials. Tell someone to line up 5 years, and you might notice some things that no one else has noticed. Do system and internal control walkthroughs. When an electronic wire EFT is sent, who approves it? What is the paper flow? What is supposed to be the paper flow, the approval flow, the document flow, and what is actually? Review tax returns and planning documents and tax audits and assessments. Read board and committee minutes if you have access to them. Read board and committee minutes. Talk to board members, the lawyer, the audit partner, key advisors. Do an insurance and filings review. Insurance and filings reviews. I don't like to be underinsured with gaps in insurance. I don't be overinsured with overlapping coverage. And I found those in jobs that I've been hired for. Now let's do a few different angles. So listen to this one carefully, and you should always check with HR and legal before doing this one. Review your predecessor's email account, their trash can on their computer, the trash can in the corner of their office, and their shredder, okay? Especially if the predecessor got fired or went to jail. There could be some interesting things in these places. And again, check with HR and legal. The other day, someone was offended. No, Steve, that's not allowed. Well, it is company property, but I would check with HR and legal. Do a vacation analysis. Have you ever heard of a fraud, where someone never took a vacation for years because they were covering up a fraud, intercepting certain statements that would reveal the fraud? Do a vacation analysis and see who doesn't seem to be taking vacation, who has some access to cash. And a little advisory note, right? Force people to take their vacation. That's just a good practice for a number of reasons. Conduct a parking lot review. It's very important to do the parking lot review. You know what I'm talking about? So why does a clerk making $48,000 have a $150,000 car? Now, we're not assuming they're guilty, but we're just keeping our eyes open. They could have won the lottery, got an inheritance, whatever. But we just want to be more aware of lifestyle and income mismatches, which could be an indicator, but nobody is assumed to be guilty. Another one is, and doesn't work great at Bell Canada, but the medium-sized company, the small company, open all the financial mail for a while. That is paper mail and emails addressed to accounts payable at company.com, accounts receivable at company.com, etc., statements at company.com. Open all the financial mail for a while. Educational, you might find some things that don't tie in and could lead you somewhere. Open all the financial mail for a while. Review manual journal entries. So manual journal entries are educational. They reveal error corrections. They reveal lack of automation, some things that need to be automated. They reveal potentially funny stuff. They reveal potentially fraud. So carefully review manual journal entries when you take a new job. Now, how about some more different angles? Sign or approve all the checks and wires for a while. So you join an organization, you're the CFO, and any 5 executives, 2 of any 5 executives have to approve every wire. So it doesn't necessarily have to be you, but you say for the first 6 months, I like to approve all of them. I like to approve all of them, which reminds me, I got to make sure about wire approvals. I'm going on a vacation tomorrow. So approve all of them, because then you will see the flow. We got a new managing partner at KPMG in Ottawa, where I used to work. I was in KPMG, Ottawa and North York. And I remember he immediately want to sign all checks for the first year. Now, the next is a bit of a mouthful. The next tip is a little bit of a mouthful. Talk to some mouthy, opinionated, long-serving, disgruntled, unhappy employees, not just in finance, especially the receptionist. So talking to shy employees, not very useful. Talking to happy employees, not that useful. Talking to some opinionated, long-serving, disgruntled, unhappy employees, not just in finance, may reveal all kinds of useful things. And maybe you have to do some filtering the truth and gossip and so on. And the receptionist often knows more what's going on than anyone else, the receptionist. Remember one guy told me, he asked the reception a few questions. He says, I should disclose about this special drawer here. They told me to put things in, and that revealed a fraud. And the last one on this slide is called Find the Secret File. Oh, excuse me. Find the secret file. We'll go back to that in a minute. Find the secret file. In some companies, there's a secret file that could cost you your job, could cost you all kinds of problems. You've got to find the secret file. So what do I mean by a secret file? I knew someone, they found a file called Hide from Auditors. Hide from Auditors. If you found a file called Hide from Auditors, I think you would quickly realize I've just found the financial reporting skeletons in the closet. Hide from Auditors. Another one to watch for is side deals by sales or napkin deals by sales, where sales has lunch with somebody and they quietly write down a special deal that's outside the normal rules, not reported to contracts administration. Side deals, napkin deals. Someone found a list of fictitious entries. That would be an important file to find. And always check the drawers, your drawer and other drawers around you. Always check the drawers for overdue filings. That's what I found, overdue filings in the drawer. Here someone found a file called, the clerk called, I don't know what to do with this file. Instead of consulting with their boss, I don't know what to do with it, dump it in the file. Someone found a rant about their new boss from the predecessor in the drawer. And sadly, this is not intended to be humor at all, but someone found a suicide note written by the prior CFO. And also quickly buys, talk to the cleaners. Don't just talk to the receptionist, talk to the cleaners. Who stays unusual hours? Who leaves with boxes? Talk to the cleaners. I skipped over that slide. Some more secret file. I once found an off-book executive pension plan in a not-for-profit organization. Unbooked, undocumented, but legitimate business liabilities. A bribe file, a secret inventory location, a fraudulent invoice file, a secret file on blacklisted former employees, suppliers, etc. Unpaid bills of a company acquired, a folder of checks being held. And here's one I found. So someone said, have you seen the secret file where we keep our bargain purchase options on leases, which make our operating leases capital leases? We have a separate bargain purchase option file. I'm sure you all get that as CFOs. So let's do, the next thing is you need to find out the skeletons in the closet from your team, from your staff. So you've got to find out all the skeletons now from your team. So let me do a little skit. So in this skit, I'm your new boss. And I moved to Toronto. Let's make this up. And you're my team. So it's our first staff meeting. I might exaggerate slightly. So hi, folks. My name is Steve Priddle. I've just moved to Toronto to take this job. I hope to make this company successful and make you more successful. I want to get to know each of you. And I'm going to continue to cheer for my Ottawa Senators, not the Leafs, even though I'm moving to Toronto and I can't afford a house. But that's beside the point. So I want to be a blunt guy. Let me just put it on the table in the first staff meeting. It sort of bugs me if things come out of the closet and burn me. Things that you could have told me about today. Suppose you've been told to reconcile a certain account every month diligently by my predecessor and you haven't done it for 17 months. Today's the day to tell me. Suppose you think there's a kickback scheme going on in purchasing and you've never told anybody. Today is the day to tell me. And if you're really shy, I'd rather hear what you need to tell me by an anonymous note. I'm going to offer an amnesty. Unless you've done involved in criminal activity, no matter what you've done wrong or in the past or covered up, it's okay. It's okay for today. And I'd rather get an anonymous note about the kickback scheme you suspect in the company than not know about it. I may reward what you tell me. But if something blows up in my face or CRA finds it, or the auditors find it, or I find it, is after today, in 3 weeks, 3 years, 3 months, and you didn't tell me about it today, I won't be a very happy camper. So, folks, I have to go to another meeting. Got to meet with the president. But my assistant has booked 3 o'clock to 5 o'clock blank on my schedule. And if you would like to share anything that you feel you'd like to tell me, please do. We'll see you between 3 o'clock and 5 o'clock today, and it needs to be today. And by the way, Bill, can you print me a 5-year detailed GL dump? A 5-year detailed GL dump. So there's my exaggerated skit-like first meeting with my staff. I don't sound so threatening in real life. You want to be careful how you present this. You don't want to sound too threatening. Now, why did I ask for a 5-year detailed GL dump? Did you get it? Did anybody get it here? Why did I ask for a 5-year detailed GL dump? Well, and by the way, I'm not planning to do anything with it. I'm too busy guy. I'm not planning to look at it. Well, who looks scared? Okay, it puts some pressure on some people. They'll assume you're very detailed and plan to go back 5 years. Someone may confess something. Can the system produce it? There's a whole bunch of valuable reasons why you should always ask for the 5-year detailed GL dump in your new job. My best story on that is there's a knock at the door from a junior clerk in a public company I was the controller of. She tells me that, you know what, the controller reports to you has forged a check. She's forged a check. And I found it on the first day. So this clerk came to see me and report, and she hadn't told anybody else. It was a bit of a complex situation. We investigated. The woman had to be let go. And there it is. That's my best story. So, then you found something interesting on a first day in a new job, share it in the chat. So forged check. But that's not my best tip. My favorite tip of all, I worry about systems and I worry about payroll skeletons and environmental skeletons and contract skeletons. The biggest single thing I worry about is financial reporting skeletons. I'm an accountant at heart. I want to have a good set of financial statements. There is one guaranteed way to find all financial reporting skeletons and ensure no future write-downs, no write-offs, no reversals, no restatements. It's called nail the balance sheet, tear down the balance sheet, deep dive the balance sheet, write down the trial balance levy when you start, and you gotta look at every number that's there and prove it, or write it off, or increase it, or adjust it, and every number that's not there that should be there, the accruals that are not there that should be there, the accruals that should have been reversed that aren't reversed. So you got to look at balance sheet reconciliations. You got to look at inventory, valuation, costing, valuation, obsolescence. You got to look at capital asset write-downs. You got to look at lease liabilities. You've got to look at accruals. You got to look at tax liabilities. You got to look at share capital. And in this process, you learn everything about the business, everything about the books, and you can write the things off and clean up the things that could hurt you. And remember to deal with the process issue behind the symptom. The process issue behind the symptom. So in the story of negative inventory, I could have had account fixed it then, but the system could have keep producing negative inventory. There's a serious system issue. So you have to deal with the process issue behind the symptom. Someone once said, Steve, can you do a course on this? Well, excuse me, this is a little bit like auditing. Many of you have done auditing, where you've got to tear the balance sheet apart, and learn a lot from that. Now, my craziest balance sheet story is, and in 35 years of experience, I get a lot of stories, and I share them in many of my other courses. My deep dive into the balance sheet of a software company, where I was the new CFO of, there were such poorly estimated product returns and a short fiscal year. The result was, once I'd fixed that, was negative revenue in audited financial statements. Have you ever seen negative revenue in audited financial statements? Probably not. And this is not the company or the numbers, but I made this up for illustrative purposes. I couldn't keep the actual financial statements for confidentiality reasons, but negative revenue in a software startup because the balance sheet had some serious problems in terms of the product return provision. So that's the best one, but there's some other ones. So I've been hurt where I didn't nail the balance sheet. Now, auditors can help you. A good question from Alex, but auditors missed this one. The auditors missed this one at the previous year end, and it could be a big problem, a reasonable sized problem, but just under materiality, so the auditors aren't. But you can engage the auditors to do a special assignment to help you. That's a good one. Would cost a few extra bucks, but thank you for that comment, Alec. So again, if you've had an interesting example of a skeleton in the closet, in an audit role or another role, type it in the chat. Usually if I do a course with 40 people, I get some interesting ones in the chat. Now, a little note, some skeletons may be positive. I'm not in a rush to find positive skeletons because they can't hurt me. One day I found a positive $350,000 tax skeleton. I was able to get an extra tax refund of $350,000 related to R&D, and a big accounting firm had missed it. And that's a positive one, but I'm not in a rush to find those. I know someone joined a senior's home or something, and they hadn't billed the province the part of the rugs for $30,000 for a couple of years. That's a nice positive skeleton. So find them where they're not so urgent. They're not so urgent. So a few more interesting examples. $5 million unsupported not in entries, not in the GL. Inexperienced accountant divided in foreign exchange, not multiplying. 40 million US divided by 1.3 equals Canadian. Do that for a while, you have some serious issues. Controller getting paid bonuses unfairly from each partner who each signed checks unbeknownst to the other. Bank loan not on books. I found this as an auditor as a skeleton. Lawsuit from backdoor sales by salespeople. All senior finance people quit. Clerks doing cash accounting for 6 months. Serious accounting skeletons in the closet. Dollars in inventory instead of units. Entries made to closed and reported periods. Oops. That's a big oops. The balance sheet didn't balance. Ouch. That's about as bad as it gets. The balance sheet didn't balance. Here's someone I met said they found a $50 million fraud resulting in an SEC investigation. Here's someone else who found a mistress on the payroll. So all kinds of interesting, difficult skeletons in the closet, but at least you found them. At least you find them, and hopefully you'll find them in the first few weeks. So we're closing here. Good luck in your next job, ensuring you deal with the skeletons. And email me if you like the slide deck. That's my email address, askpriddle@bell.net, or you have follow-up questions. So I have put together 9 courses, all with real-life stories, a little bit of humor, useful tips from my experience, not theory, not technical. And they're offered by CPA Ontario, other CPA bodies, and directly through my website, practicalpd.com. So I will leave that slide up, and I think my time is just about done. And thank you for having me and joining the Toronto Jobs conference here, the Toronto Jobs CFO virtual conference. Thank you. And I don't know how it works, but I'll hang around if anyone has a question. I don't know if you can turn your mic on, or we'll do questions through the chat, but I'm still here. And I look forward to catching some of the other sessions. So it says on the slide, there's 34 people here. You might want to switch over, since we're done, switch over to the other session. I have another computer open, and I can see there's only 17 people in the other session, but go check out the other sessions. And maybe I'll meet you one day in a Zoom or live session. I speak live until COVID. And I love to do my CFO job, but I just do like speaking on the side, making things a little more interesting, and sharing some real life experience that becomes tips. So my life experience becomes tips for CFOs and controllers. And I've spoken to 14,500 controllers and CFOs over the last few years. So I'm watching the other session on my other computer. I turn my microphone off here.